Hi, everybody. It's Michele K, Michele Kreinheder here, and I'm back with my go live streamings Friday at 10:30. I had been doing these for a while, but I was waiting until Compass, we moved into our new offices because before I was doing it it was a phone booth. So, I had my privacy and I felt very claustrophobic and I just thought it looked just so poor. So anyway, very excited. Compass is in our new offices that you can see behind me here we're at Second and PCH, a beautiful mall. If you have not taken the time to go in, I would highly recommend you do that. Yeah, I just want to say, before I get started, that I know if you guys follow me at all, you're probably so tired of hearing this, but it's my free shred event tomorrow. It's at Cal State Long Beach. I've been holding these shreds since 2009. I'm pretty sure, even with COVID, this is probably about my 25th event. Two trucks. I was talking to another agent the other day, and she said, "Oh yeah," she's like, "Our team, real estate team, tried doing those, but nobody showed up." So that's not how my shred events go. I've been doing this a long time. Like I said, if you follow me, I advertise the heck out of them, and but they move great. We're so organized. It's Poly High School wrestlers will be there helping to unload at the lower campus at Cal State Long Beach. So Atherton, the Pyramid. I've been telling people Google 5900 East Atherton Street. It will get you there, and then you'll see the signs. No limit. Two trucks. It takes a lot to fill up two trucks in 3 hours. And just give generously to the wrestlers. That's about all I ask. All right, so it's 10:30, so I'm going to start with the real show here, and I'm going to bring in my guest. Hi.
Good morning.
Good morning. All right, let me put up your name here so we can see who you are. This is Felix Shiels, and he is VP of Mortgage Lending. Is that the title, right? Correct? Of Origin Point. And I started at Compass. I've been here for about a half a year now. And so I met Felix shortly after I started. So he's sort of a new acquaintance to me, but he's great because we come in, we work in this office. Felix is here most of the time. And to have a lender right there that you can talk to and get the news. Yesterday we were working side by side, and he's on his phone, watching who's the Fed guy? What's his name? I should know.
Jerome
Um,
Powell.
yeah, Jerome Powell. I was like so excited. I was like, oh my goodness. But Felix, before you say anything about yourself, I just want to say, because we're new friends on Facebook. I was sort of trolling you yesterday, and you're a very handsome guy, but your wife is really pretty.
Thank you.
Yeah. And you have two boys.
I do. And if you can see, there's a picture right here.
It's pretty.
You can barely see it. When we did a little photo shoot, and we have twin boys.
Oh, they're twins.
Yeah, and they're going to be
Wow.
5 next month. Um, and then we have a baby. I guess he's turning into a toddler, and he's 17 months. So
Oh my gosh, that's right. That's right. When I first met you, you are busy. Yeah. Well, I just saw the two boys. You had them. It's a picture. You have them on your lap, and you sort of have a baby face yourself. I'm like, oh my gosh, cutest picture. But yeah, just tell us how you about Origin Point and how you got here and all that good stuff.
Sure. So I am celebrating 20 years in the mortgage business. I've worked as a broker in the past. I've worked as uh, for large banks as well throughout my career. Um, and the opportunity with Origin Point was an amazing opportunity that I decided uh, to that I couldn't pass up, was mainly because I got to work with great agents like yourself at Compass. And so we are the in-house lender for Compass Real Estate, and and I've now been with the company for going on 6 months.
Okay. And guaranteed rate, do we talk that you're aligned with them somehow or?
Sure. So we're technically a sister company of Guaranteed Rate. We essentially have their platform, but we are a completely separate company. And so we have all the tools, we have all the infrastructure, but we have a much leaner and a much more, I guess, experienced sales staff. And so, um,
Yeah. I mean, I don't know when you came in and you were introduced, okay, Origin Point, and I've always liked guaranteed rate. I mean, any listing I've ever had and somebody brings them, it's just been a really great experience. And I can tell from, unfortunately, we've been trying to do a deal together, but I can tell from listening to people in the office that, yeah, that you guys know what you're doing.
we are the number one non-bank jumbo lender in the nation. So
Ah, that
we
would
can
sort of make sense, being aligned with Compass, which is a luxury brand. Okay,
exactly.
got it, got it. All right. Well, of course, we were saying today that the topic, right? It's it's on everybody's lips. This the interest rates, right? How they've just increased so quickly. I was saying that I said, I think there's a stat that this is the highest it's gone, the quickest, or something to that effect.
Yeah. So uh, since the 80s, you haven't seen interest rates increase this quickly year over year. Um, we went from right around 3% at the beginning of the year upwards to now about 7.5%. Now that's on conforming loans. So any loan amount essentially within about 650,000 and below is considered a conforming loan amount. And so those interest rates are going to carry a range of about 7.5% right now on a 30-year fixed.
7.5. So I'd say that's even to me. I'm like, okay, we were at 6.75 just like a couple days ago. So,
Yeah,
so yesterday, that announcement from Jerome Powell, it did have an immediate effect.
absolutely. And so there was pricing already baked into the interest rates. But once he had his press conference, he alluded to the fact that interest rates are not done going up. And so to that end, the the way mortgage companies price their mortgages is essentially you have 30, 60, 90-day locks that they have to account for. And so
Uh,
when we're locking loans, we're locking in the future. And so the anticipation is that rates are going to continue to increase.
I see. I see. So it was those few little sentences that he said after that caused this more. I have to say, I have heard the term baked in more times in the past because we're always like, did the interest rates go up? No, it was baked in. I was like, oh, okay. So it's been quite a learning process for me. 12 years in the business, and I mean, I've never seen anything like this. I mean, I don't think anybody else has either. So
Yeah, I think
yeah.
it's eerily similar to 2008 without a lot of people losing their homes and jobs, which is the silver lining, I guess you could say, in this whole fiasco of interest rates increasing so high.
Yeah, yeah, it's, thank goodness that's not going on because that was really terrible, and I don't the prices, I'm gonna knock on wood, for sellers, they're not plummeting, we're seeing a slowdown. Definitely, I think I keep waiting for October's, stats to come out. Like, I'm like, sort of like crazy about going into the board gives us those, and they haven't come out yet, but I really do think this month we are gonna see an even greater slowdown than we saw in September. And
Sure,
I mean,
I would agree
afterwards.
with that.
Yeah, yeah. So the other thing that's happening because of this, which is also very new, is seller credits. Like, oh my goodness, like people would ask you about seller. It was like there is no way a seller is going to give you any money because they don't have to. So wow, on a dime, right? We've changed here, and so what Felix is going to talk about is products that you can offer, right? That will help the seller and help the buyer. Let's put a deal together because that, you know, people need help with these, with this increased rate.
Absolutely. Yeah, there's definitely alternatives and more creative financing to the traditional 30-year fixed loan options. And to essentially whatever rates published, it's not necessarily, when people hear 7.5%, that's a scary number. And so there are ways to reduce that in a monthly payment. There are ways to reduce that in an overall payment over the life of the loan. There's a couple different options we have. We have permanent buydowns, where a buyer or a seller can contribute discount points in order to permanently reduce that interest rate. Okay, so let's say it's a 30-year fix that's 7.5, and you pay 1 point to drop your interest rate down to 7.25. That's a life of loan savings of 0.25% over the rate. Now,
and how much would, and 0.25% would be a quarter of the loan amount? So
correct. So let's just say a $500,000 loan amount at 0.25%, you're paying $2,500.
Okay. All right. So a full point you would,
or actually I should say that's $1,250.
Yeah. So for a full point, it would be $5,000, which would bring it down to 1 point.
Exactly. So we have to look at what that payment does and what's the cost. So we do kind of a cost benefit analysis to see when is that break even point. And so the kind of the underlying thought with a lot of us in the business is that rates are high. They're higher than they've ever been. They're likely going to come down. To what point, we don't know yet. So people are somewhat open to the possibility of refinancing in 2 to 3 years. So does it necessarily make sense to pay points to lower your interest rate if you're still going to get a refinance done within the next 2 to 3 years and drop your interest rate below what you're paying to get it now?
Okay. All right. And so that this is where I think where we're going with this is he's got a program, right? And I'm gonna bring that in now so we can look at that. What do you call this program here? Help me.
This is a temporary buy-down program. Okay, so for the first 2 years, you will be able to reduce your monthly payment. Now, it doesn't reduce your interest rate for the life of the loan, but for the first 2 years, you can have a seller contribute to reduce your monthly mortgage payment for the first 2 years. So we're looking at this example at an $800,000 loan amount at 7% interest rate. That monthly payment is $5,332. Now, this is a 30-year fixed loan. Okay.
Got it.
Now, year one, your effective interest rate that you would be paying would be based on a 5% interest rate, which lowers your monthly payment by $1,027 per month for the first 12 months. Now, keep in mind, this is being paid by the seller, okay? So you're essentially able to purchase that property, and for year one, your monthly payment is based on a 5% interest rate, or I should say a 5% payment interest rate, okay? Year two, that would then go up. So for the first year, you're basically down 2%. Year two, it now will go to 6%. That monthly payment is still a monthly savings of $526 per month. Yeah. Over that 12-month period, you're saving $6,300. So that total cost, so after year two, you then revert to that 7% interest rate. That total concession, that seller credit that would be required in order to accomplish this is $18,646. So we can then offset your mortgage payments because of the seller helping with that.
Gotcha.
Again, going back to the thought that if
interest rates will drop.
Exactly. Well, so let's look at it this way. If you're able to, for the first 2 years, drop your interest rate 2% for the first year, 1% for the second year, and let's just say interest rates end up staying longer or staying higher for longer, which is a term that the Federal Reserve, the chairman, basically said.
Or what if they go up? What if they go up above this 7%?
Exactly. So now let's say right now they're at 7.5%. Let's say the rates go up to 8.5%. You still have that 7% interest rate locked in.
Gotcha.
So you're essentially winning. There's a very there's only a win, or essentially I should say a tie. So if rates don't move up and you are still at 7% or 7.5%, there's no loss to you, right? Because rates are the same, if not higher. Now, if rates do go up and you've locked in that 7%, you've gotten the benefit of the first 2 years having a lower monthly payment.
Right.
And so that's where the benefit lies. And again, the hope is that rates will come back down into the fives.
Or if you're more of a conservative person, you could just buy down the rate and just that would be your 30-year fixed. Okay, you've got it at that rate. Lots to think about for people. I just want to share in our office meeting. I'm going to say Steve Nader, who I just think, I don't know if you're thinking of joining an office, he just makes the office meetings just, he's a great verbalist. But yeah, if somebody had their house listed for $850 and, they were having a hard time, putting a deal together with a buyer because they were, their approval wasn't there anymore. And so they said, okay, we're going to go enter into a program like this. So they increased the price of the house to cover this. And then the seller gave it back. So the seller got their price. They got their $850. There's nothing toward here. I mean, lenders know that there are credits given, correct?
Absolutely. And to add to that, and I think the factor on the seller side is that property was actually in contract and fell out of contract. And the buyers couldn't perform because the interest rates went up. And so they didn't qualify anymore. So they had gone back to, and Steve mentioned this in the meeting, he had gone back to another offer that had been submitted and said, if we can offer some type of a seller credit in order to offset your interest rate and your payment, would that still interest you? And so it was a win for everyone.
It was a win for everybody. And who doesn't love a win-win? Yeah. And it did appraise, to get into the nitty-gritty of everything that goes on. But I do feel when I got into the business, it was 2010, so the market was down. My worst years for appraising was 2012, 2013, because we were seeing this upward trajectory, but the prices that the appraisers were looking at just weren't keeping up. Well, I think right now we sort of have the reverse, right? Because, going back 3 months, prices were higher. So I think it's all making sense as of this moment for appraising. And
absolutely. And I think we're still seeing stability in price, which is great. And so I think for sellers
in Long Beach, I don't know anywhere else, but I know this, our little niche in Long Beach, we're holding tight.
Absolutely.
All right. I know you wanted to talk about another, just different products. You could do a adjustable rate, which that's like you say a 5-year arm or a 7-year arm, correct?
Yeah. So what that'll do is that'll essentially give you a lower interest rate. Now, this is another way to, if you can't get a seller credit and you're not willing to pay for a buy down to buy the interest rate down, the other options are adjustable rate mortgages. And those are fixed for terms either 5, 7, or 10 years.
An adjustable rate, another term for it, is a balloon mortgage. Is that correct?
No. So what that means is it's fixed for a set period of time, whether it's 3, 5, 7, 10 years, whatever it may be. After that period, that fixed period, it then adjusts to whatever the margin is that the lender kind of has as part of the number. So always ask what's the margin, and then it's also based on an index. And so a lot of times the index is on adjustables now. It's called SOFR, SOFR. So that's what the index is based off of these days. It used to be LIBOR, and so.
Oh yeah, LIBOR. I've heard. I've never. This is a new one on me. Okay.
Yeah. So once the fixed period ends, which is again 3, 5, 7, 10. Once that period ends, it then can adjust. So if rates go up, that payment, that interest rate could go up. If rates come down, your interest rate could actually come down as well.
Okay. All right.
So that's the adjustable. We have interest-only options as well, which would give you better cash flow temporarily. Now, you wouldn't be paying any principal down unless you did that manually, but that would give you a lower monthly obligation. Again, with the intent to potentially refinance in the future, or if it's a property that you're not going to stay in for a long period of time and something temporary, then and you see appreciation within that property, you essentially can pay interest only and not have to worry about paying a larger monthly payment.
Okay. And then I know you were pretty excited, and I think this does sound like a really good program where you're looking for a house, you have not found your house, you're pre-approved, but you can lock your rate in now.
Yeah, so we have a program called Lock and Roll. And essentially what that does is that'll give you rate lock periods for 60, 75, and 90 days. Now, there's no cost to that, but once that period expires, essentially it's for someone who's making offers, who's really serious about buying and wants to buy within a certain period of time. We can lock in that interest rate and eliminate any rate fluctuation. Now, if the rates do happen to come down, then we can do a renegotiation, or we can potentially reduce that interest rate as well.
Okay. All right. Well, that is a good product.
Absolutely.
All right. I wanted to. It was pretty painless, right, Felix? It was nice.
For being my first time, you were a great host.
Thank you. Okay, everybody. Just Michele Kreinheder, Composite Real Estate, and everybody have a fantastic weekend. And if you have any sensitive documents to shred, Cal State Long Beach, 9 to noon tomorrow. Bye.
Thank you.